Hey everybody, this is Modified Darvas Box, MDB, and I've got another quick video on the S&P 500 updates, which just came out that I just downloaded. Um, Before I get into that, just for people who don't know who I am, I'm a regular guy who made an investing system based on this book. Check it out on Amazon or somewhere out on the internet. It's a great book, very valuable. I suggest you read it. My system in a nutshell is I look for technical patterns that look sort of like this. This is a bullish Darvas box pattern, and I try to avoid or short bearish Darvas box patterns that look like this. One of the things, though, that's part of my system is not only do I look technically, but I also look at fundamentals. Fundamentals like sales and earnings. And one of the things which I look at is sales and earnings for the S&P 500 index, because to get a flavor of what's going on with earnings in the stock market, that points the direction of growth and valuation. Is the market going to be going up based on these types of numbers, or is it going for a future that's looking much worse? Many people think that, charts like this and drawing lines like this is all there is to investing. No. What drives all this price action is what's underneath it, going on inside the company, sales and earnings. I don't try to make it too complicated. I do not look at cash flow numbers. To me, since I look at growth companies, why do you need to focus on cash flow numbers for a technology firm which is growing leaps and bounds? If you're in a mature, large cap company that's not growing very fast and that might have a lot of debt, then yes, cash flow is very important. Can they pay their debts and do everything and invest in the business and pay their dividends? Okay, yeah, that's important. But many people sweat over lots of different metrics. I like to keep it as simple as possible. Let's focusing on the earnings, focusing on the sales. And many metrics I can't even follow. Like, for example, Netflix subscriber numbers. I can't track that. So I track what's easily trackable. And in this case, sales and earnings. And this sheet I get from S&P 500 website. And this is the earnings for the index. And this is very exciting. I've talked in a prior video how we're getting close to full bull because the S&P 500 index is breaking out of its Darvas box to the upside, going into a bull market. The NASDAQ broken out to the upside, going to a trend. The Russell 2000 in a Darvas box, but very close to breaking out. So in my opinion, the market's getting ready to fire on all cylinders. So one reason which I look at this fundamental data is this in sync with that price action? And the good news is I can say yes, it is. All right, let's get into the sheet here. I downloaded the latest numbers here as of Halloween, October 31st. It's only a couple days old, so it's very fresh. Here's the latest numbers right here. Good news here is the growth percentages look freaking awesome for the future. Currently, we are 73% reported of the S&P 500 companies. Yeah, the Q-on-Q quarterly percentage growth rate is minus 2% right now. That just sucks. And that explains why in the months prior, the trading in the market's been excruciatingly hard, because this growth number just stinks. And this is a direct result here of the Federal Reserve raising interest rates too high. We are motoring along since the Trump election, cruising, things are cool. The Fed raised rates too high and slammed the brakes on. Look at the decline in percentage growth. Terrible. But the good news is the Fed is grudgingly lowering rates, and now the market's starting to accelerate. With this forecast here, this minus 2% is probably already in the rearview mirror. Now that the index is 73% reported, we know it's a known. Now we can hit the gas and get into this double-digit percentage growth. Valuation, yeah, the market's a little expensive. So if the bears have an argument, it would be valuation. We're about between 18 to 22, call it maybe 23, based on PEs. By my little grid here at the top of the screen here, an 18 is roughly equal to an average market. 22, 23 is equal to a strong market. So I would put it between average and strong. We were in a much stronger market here in the prior years, like 2017, where the forward and the current was more, we're both in the 20s. So this tells me that there's room for the market to go higher. The numbers are going to accelerate, and we're seeing that in the prices. The market's going up. Wow, what a concept. So anyways, in my opinion, the future outlook is really strong. It's looking good, and definitely supports the bull case. Take a look at the information in here, and maybe you agree, maybe you don't. But going forward, we'll see what happens. All right, have a good one. Talk to you soon. Bye.